The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
And yes, this is the Tiger Technician's Hour. My pleasure to be here Monday, Wednesday, Friday, 11 o'clock until noon. Wednesday being the day that we start off, as always, with we've got Steve Rhodes, 9 o'clock till 10. Tom O'Brien and Steve Rhodes together at 10 and 11. Great shows, two fabulous shows. I come on 11 o'clock till 12, and then Larry Pesavento comes on. And then we've got Dave White, 3 o'clock till 4. And, of course, Tom wraps it up at 4 o'clock till 6. So we have information for you here. This is such an important period. Why? Because in the charts that I have, we've broken out to new highs in the monthly charts, new recovery highs, that is, in the Dow and the S&P. That was really important. What I would love to see, markets don't necessarily listen to anybody since they don't even know you exist. What I would love to see is a close kind of near the high today. No big smash to the downside. And then one pop-up tomorrow or the next day to new recovery highs. Why? Because I would love to see March start off with a new recovery high to extend the monthly charts. Because if we close towards the low of the day today and then gap down tomorrow, we might be looking at most of, or if not the entire month of March, having lower highs, and then I get my peak E in both the Dow and the S&P, and that's where you got to be careful, real cautious. But if we break to a new high, even if we pull back, it delays the notation of a peak E until the following month, because you need to have one entire bar below the other entire bar. I'm going to be going through this in tremendous detail tonight in my webinar on the core, the basics of the ChapmanWave. I won't be getting into the moving average, etc. I will be doing just other structures, left side, right side, price, time, action. Let me show you something. I worked on this earlier in the day, and I've just transferred it over to this chart here. If you have what I would call a verifiable technique, you should be able to replicate it in any time frame on any chart. It should just work. This is my philosophy. Well, when the Dow started to use intraday highs and lows back in, in fact, I'd like to look at this. Let me put that on so I can actually see. That'll be good practice for tonight. I'm just going to get my, bending over. I've got a lot. If I got cables and charts and computers and screens, there you are, and paper galore. I'm just trying to get this all set up. We're going to have a fun session going in here. And close that down. And what do I want? I want to get to Tiger TV. So we'll go to Tiger TV on my cell phone. And we go to punch that in there. Here we go. I just need this. Takes 1 second, and I'll be there. The reason why I want it is I want to see what you can see, because the chart that I'm coming up with right now is going to be of the Dow going back to when it's a daily chart, so you have to forgive. There you are. To the 1st of October, 1928, where it was the first time that published highs and lows were made. Now, I know that many are expecting that we're about to have a major sell-off. And I have to say that I can't quite be in that camp right now, because I do see the chance of a sell-off. I do see the chance of something occurring. And I'm going to explain to you what that means to me. So let me just go, I don't know why today's taking time, but that's the way things work in technology. When you need it most, that's when you can't get it. Okay. This chart that I'm showing right now is the Dow's low in this, I used to do you see those tiny little lines there? Those used to be pinpoints. And the work that I did in my hand charts, I used to go bar to bar to bar to bar, and I used to count the peaks. That's how I got into the ChapmanWave in the first place. Now you get the highs, the lows, the close, and the open. But the low bar of the 3rd of October, 1928 to 233.60 starts off a buy signal to a buy mode. I'm going to explain that tonight. I'm going to go through it. The concept is in the ChapmanWave, a buy signal that upgrades to a buy mode should take you to at least a peak D, the 4th highest peak. It's simple. I mean, that is the simple concept. So what do? You go to your first peak D, October the 24th, you pull back. You go to your second peak D. I'm not making these up. I couldn't make the price up. This is there. I mean, this is historic. 299.35, November the 28th, 1928. Sharp drop, trough B. You go up A, B, C, another D. So now we've had, since October, the 3rd or whatever it is, we had an October 4th or 3rd low this last year. We've got 3 buy modes to peak D. So now look at this. 3rd of January 1929, plop. Starts a new buy mode at 292.89. Where does it go to? It goes to a peak D, but within 2 bars, it quickly goes to an E. The speed of D to E is very often a tell to say, be careful, because you could get quite a sharp pullback, and that's exactly what happened. Pulls back from the high of the 5th of March 1929 down to a low of the 18th of February 1929 to 293.40. And what does it do? It goes A to B. Those are gray A and Bs because they're underneath the previous highs. And then it fails, and it makes a cup formation with a beautiful, look at that. Techniques work. It doesn't matter what day, what time, where you are, who you are. And it goes like that. And it gives you a left side, right side, price, time match. Bam, to the day. All right, so that's red. Plummets down to trough C, starts another buy mode, goes to peak A, fails, but holds way above the low bar. That's the low bar of the 22nd of March, 1929 at 281.51. Oh, happy birthday to all of those who are having a leap year birthday. One of my subscribers said that her son is going to have a birthday today, and I said, well, happy birthday. If you can't make the webinar, it'll be archived, so you'll be able to watch it then. Although the webinar tonight is going to be really important because it's going to discuss what we should be able to see going forward. Now, there's a new recycle, and it goes to A, B, C, D, and it certainly goes on. It takes you to D. Well, how many Ds have we got now? I can't remember. This is the 5th one, and it still goes to E and F. F is where you've got to be really careful. Remember, the Dow made its major peak in 2007 at that peak F doji high. And here's a doji high. I'm going to talk about candles as well tonight. It plummets down from that high of May the 6th, 1929, down to a low of, in May, the 31st of May, 1929, to 290. And what does it do? Starts a brand new buy mode. I don't have to go much further. Look, I'll click on. It makes a peak D. The 8th of August, 1929. I'll show you the chart. The final peak D was the doji high, 386.10. The weekend, the Labor Day weekend, when those folks were on their cruise ships with the latest thing, watching the hysterical stock market with the new technology of the bubble. I don't have time. I'd love to talk about new technology. CNBC has just got all the stuff going, millions and millions of dollars. I don't know how much they spent to get all the stuff going and all the new. That always makes me nervous for at least some kind of a type of consequence. So I do keep that in mind. And 1929, the Labor Day weekend finishes on the 3rd of September. 386 was the high. 381.10, closes at 381.17, and it goes plummeting down and down. Now, I heard Steve talking about 1987 with the two dojis. It sounded so familiar. I went back in my records because it might have been 2460, I'm not sure, but I had a sell signal, and we from the Dow high, which I sent out to subscribers. Fidelity was one of those subscribers, and then we had that bounce. When I done a lot of work with 0% changes, where the Dow closes less than 1 point. I call that a 0% change. And what happens after that? Well, we made that exact. It was unch. It was exactly unch, if I remember correctly. 2004.60, or was it 2006.40.23 or something? I could go back and find it. I don't feel like, I could do it right now. And what happened was, I said in my work, that tells me that if we are down more than 40 to 60 points at noon from this level, we will plummet. And that was, in fact, the dreaded H at the time. I didn't know it was the dreaded H because I didn't have the technique. What is this? I'm just trying to find it. Sorry for being a little confusing here. But, the verification is 76. We're really close. Let me find out what it was. I've got many other charts notated. This is a white background. I've never done the white background, and I thought it would be very important. 78. It would be very important to, it's 87. 87. It would be very important to get there we go, okay. I'm looking forward to this. So this was the August high. There it is. There are. We made an exact 2640.99. How's that from memory? 26.40.99 on the 2nd of October, and 2640.18. I'm sorry, I was off for a few cents. On the 5th of October, and I said if we plunge down more than 40, in those days 40 to 60 points was a heck of a lot of points. And what happened is we started our move straight down. So it's interesting that we can go back, and that this pattern, which I will be discussing tonight, I hope I'm not confusing everybody, will be right there, and we'll be looking to see how I couldn't find it over here. So we'll be able to look at everything that in terms of the simplicity of the Chapman wave, going from A to B to C to D. You can go higher, but D's are the requisite. What happens when it fails? What exactly happens? Why do I have alternate counts in the market right as we are at this particular moment? I didn't update that. That's interesting. 27, 21. That should be updated here. This is either F. This is either peak G, leg G today, going to a peak G, or a G/C. So that's going to be interesting. I'll talk about alternate wave counts and what you do when you have that, what you need to look for. All right, let's go straight to the numbers. The Dow's down 33 at 12,971. The S&P is down 3 at 1369. Comp is down 7 at 29.79. Gold is down $57 at 17.30. Silver's down 1.30. And we've got copper. Copper is down 175, and bonds are down 29. I'll be right back. Straight in.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, and right as we're talking, I had to reconfigure the New York Stock Exchange because something was wrong. I couldn't understand. Maybe something was being covered by the moving averages. I redid it now on the naked chart, and it seems to me, and this is the one missing link that I was waiting for, and I'm not sure yet whether it's in place. But if in the New York Stock Exchange I had a peak D, a perfect peak D from the October low in the daily chart on the 4th of October to the high of 27th of October, peak D, pulls back to a trough C. Remember, on the downside, I use technicals more than the letters. Tell me the power of the move down. If it only goes to a B and C and starts a new buy mode, that's really good. That's like when the Dow aborts at A and B. I'm going to show that. I'm going to show that in the charts tonight. That on the downside, that's very negative. But what happened is it went to trough C at 68.98.12. Yeah, on the 21st of November, had a powerful leg A. Many stocks did, pull back, and then started a brand new move with a little mini A, then picks up the two together and goes B, C, D. I was wondering whether that was an instant restart in the Chapman wave. But if I call it continuation of the pattern, it goes E to F, makes a top on the 25th of January at 79.26, pulls back for 2 days. That's been the characteristic of these pullbacks. And then what it does, it goes peak A, B, C, D, E. That was the difference. And that takes me to a second leg F right now. That says that and this is what I've been saying in my opening call, that we're going to be very careful. I don't want to add any new positions on the long side. And we have in place a particular methodology that we're going to use if we want to go short, and how we will go short, depending on price action. So that tells me that finally I do have the S&P in the same wave count with the Dow. The Dow did not make a new high yesterday, and that went to F. That's when you've got to be somewhat cautious. Now, this is another thing that I'm looking at. I've added this more as triangles. I know it looks like the butterfly, and I know that it actually looks very similar to the ones that have been shown here in the den that we've looked at. But all I've done is I've joined the work that I have. I've got my notation of the E-minis from the trough on the 4th of October. It went to peak D just like the others. Then for those of you who have taken my webinars, the last couple of webinars where I discussed the brand new technique that I developed, you'll look at one bar after peak. The bar that makes peak D in the E-mini is very critical, and you pull back all the way down to the 1141.75 area. You run up to a peak AB. Remember, it was A in the chart we just looked at of the New York Stock Exchange. This went A and B because it has overnight sessions. It pulls back from B and starts and then continues the buy mode by going C, D, and there's an instant restart, a perfect one right there on the 6th of January. 2012 and the 9th of January. Then we start a brand new ABCD, pull back from the 26th of January. Meantime, we're making this narrowing rising wedge, and then we go A, B, C, D, E, doji high, pulls back on the E-minis, and this morning it goes to 1377.25. I've got that now as leg F, possibly peak F. One of the reasons being I've got such a big divergence, and I have the same thing in the I've been talking about it for about a week, over a week now, that there's been a divergence in the rising price and the falling MACD. I never like that. Number one. Number two is the stochastic was holding really well and still is holding well at 86%. So it says to me, I've got to set things in place as if there was to be a pullback here. I call it a pullback because we don't know yet. And I've got specific levels to watch in the NYA. If you look at the ES, the March, where did that go to? If you look at the ESH 12, why is it not showing up here? ESH 12. Uh-oh. Don't tell me. Let me just go to this because I think that I must be running out of memory. I've got 20 gigs. I don't know what they want. So I've made a peak D in the 120-minute, two peak Ds in the 120-minute chart. It's just broken the left side support level of 1364.50. We're going to be careful here, especially with gold down $60. So now look at this. You've got a peak in the in the 10 minutes. So I'm going to get rid of this for now. Maybe I've just got too many charts up right now. Close the workspace. Save, yes to all. Now this will work just fine. I think that's the issue. Now we're going to go to this thing, ESH 12, and there it is. There it isn't. Oh boy, I've got troubles. I better get rid of those troubles by tonight with my webinar coming up. That gives me a chance. During the break, I'll do something quickly. I don't know what I'll do, but I'll figure out what to do, and we'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's down 67, S&P's down 655.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You You can take advantage of this traders market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tell you what's fascinating here, folks. 877-927-6648 is the number to call. Love to hear you. Love to get a call from you. Lennar, the home builders actually pulled back over the last few days. Had me a little worried. And then all of a sudden, they've had spectacular moves today. Lennar is up 70 cents at 23.21. There's leg D in the 120-minute chart, made a beautiful peak F-top. What have we got here? We've got, let's go to Toll. Toll is up, up 73 cents at 23.16. Trying to get back into that mini up channel in the 120-minute chart. The daily. The daily. Well, if they can hold, that's going to be very important. But a little concerned about the weekly charts as they're starting to tip down. But so far, that is good action. So let's just go to a couple of different things. Let's look at the TLT. The TLT right now, this is what's going on here. The TLT has just gone to a peak E in the 120-minute chart. And if the market is tanking, then you would expect that money would, normally this is what happens, money flows from bonds to the stocks when stocks are moving higher and bonds are starting to show a little bit of weakness, and money loves to go where it's preferred, and if it's being preferred where something's moving strongly, it'll move there. But at the same time, when the market is acting like this, you would expect that the TLT, now this is fascinating. I've spoken about this trading range that we've been in the weekly chart for a long time. Just once you set the parameters in a rectangle formation, can stay there a long time. Look at this. The down channel in the TLT stopped dead yesterday, right at the resistance at 119.14. Actually, it's about 119, went a few cents higher. Then it pulled back. Today, you would anticipate that right now it should be flying. Bonds should be, easily. If yesterday the close was 118.15, bonds should be, if this is the kind of action that we are looking at in the market, and the market is going to close down 120, 130 points, I would anticipate that bonds would break above yesterday's high of 119.14 easily. Now, this is the channel that we're looking at. Green, and I will show some of, if I get a chance, I'll do it tonight, but these are all techniques that I go through in great detail in my Master Trader series. You'll see that there's a repellent zone in the TLT daily chart. Well, until the TLT can break and hold above it, maybe 2 out of 3 sessions, and that would be above, well, 119.14 is obvious, but it really just needs to get above 119.03. That will break the trend line, close above it, I mean. That'll be very important. So I'm saying to myself, hey, I'm going to be watching this real closely. I'm also going to be watching the VIX index, because if the VIX index right now it's at 18.46, it's only up 50 cents. But on the daily chart, that's nothing. It's nothing. And let's just talk about the dollar, because my 3 bears, you remember VIXy, Bondi, and Dolly, that's the VIX index, the bonds, and I usually use the TLT, and the dollar. You remember I had a target of 78.10 as the 200-period exponential moving average target for the dollar. Today it went to 78.10 was the low. And you can see there's the 200 move. I'm not making anything up. That's exactly what it is. It might have been a penny or two different. But most importantly, I have a time price match. Now, I was asked by someone, could I discuss the cyclical work that I've got that says somewhere in maybe the 2nd week of March, maybe the 3rd week of March, and in some cases it's April. I've got different cycle dates that are very important. Well, for the dollar, if there's a price time match, let me just double check that I've got this exactly right. Yeah, if there's a price time match, then the key level would be 77.55, 70.90s to the 77.55 area by the 5th or 6th of next week of March. That would say that the 9-period exponential moving average is going to repel the price and the dollar will not break out. Now let's look at the euro. The euro, missed its leg D by 5.005 this morning. It went, peak C was on the 24th at 1.34855. Today it went to 1.34851. It needed just 5 pennies to go, 5 whatever those things are, ticks, to go above it to make D and then pull back. And the stochastic still at 88% and the MACD is still very good. And it's holding the 9-period exponential moving average. So let me put this into context now. I'm going to be putting it into much greater context by the end of the evening, this evening. But let me try to do it now intraday. I don't like to do things intraday because I like to use bars that have closed. Otherwise, I need to look at shorter time frames. If I am looking, let's go through the Dow now. If I'm looking at candles of great importance, what I discussed for subscribers to my opening call the other day is that the candle that was made at 13.027 on the Dow on the 27th of February says that even if you go higher, you should come back and test the test the body of the candle. And that body of the candle was at about 12,900. 12,976. And no matter how much you pull back, before you start the bigger move to the downside, if there is going to be a bigger move to the downside, you probably have to come back and test that candle, that there would be a yo-yo and a sine wave. I even said that, and I had to respell it because I don't know what I was thinking. I put S-I-G-N, wave, and then in my report that I usually do below my commentary, I don't know if I've still got it. No, it just isn't here. Below the commentary, I put sine by S-I-N-E. And that said that intraday we should have wiggles over and under. Well, that's exactly what we got. That's what the candle means to me, that particular candle, long-legged candle. So at this particular point, I still see the upside as being fairly limited. I see enough strength to actually try to make enough. If we don't close down 85 to 110 points today, I see enough strength for us to just struggle and try to make new recovery highs. And then I think by sometime next week, at the latest, we should start to get a consolidation. I'm calling it a consolidation. And I'm going to go through a couple of things why. 1, 2, 3. The Qs are in leg F/D. No sign yet of a turn down unless there's a doji close today and we spike sharply lower at the open tomorrow and do not make a new high for 3 days. That's above 64.96 if that is the high. If you look at Apple, on Apple's chart, what I've got is a potential doji right here with a high of 547.61. My 120-minute chart says, and this I don't know how many times I'm going to say this. Look in this Apple chart. Look how many. If ever there was a technique that had this kind of ratio, I wouldn't say of success. I'm not talking about success. Got nothing to do with success or failure. Of repetition. That in each buy mode you get at least a peak D, one peak D. You've got one in the beginning from Apple's low of 378 on the 14th of December to a peak G, but it did make the D, so that's one. Then another one to an F on the 9th of January, that's 2. Then another one to the 19th, that's 3. A rogue wave spike to E, and it pulls back and then makes a quick D. So that's 1, 2, 3. This is the 4th one on the 1st of February. Pulls back, goes to a D with an instant restart on the 9th of February. Makes another D on the 15th of February. I've lost count. Each day I do this, I lose count. So that's 1, 2, 3, 4, 5, 6. Another quick peak D on the 21st of February. 7. And we've just made another D. That's 8. Hey, you want to learn something? Come to that webinar tonight. Do I trade it perfectly every time? Absolutely not. I do my best. But believe me, there are moments when you're just not sure. And you have to do it. You don't go to jail if you get the letter wrong. You've just got to do your best to be able to get the look-back period and count it correctly. Look at the Qs. 1, 2, 3. Where are we today in the Qs? We've just made a peak D if this 120-minute chart doesn't make a new high bar. So I'm saying, and the stochastics at 66%, so that's a little bit negative, but the MACD is still strong. But it remains in the up channel. So I wonder if I've got the GLD here. The GLD, look around to see if there are any callers. I do want callers. I've got to get callers. 877-927-6648. We went to a peak E with a cup and ladle. Oh, this is a pattern that I love. ChapmanWave cup and ladle goes to a peak D in the GLD on the 2nd of February at 171.23, pulls back to a trough D on the 16th of February, runs up to a D and then a quick E in the cup and ladle formation, which takes you usually to a D or an E. Then what happens is it tests the lip. That's really important in this particular technique. 171.23 on the 2nd was the low that we had to watch for. The high. Now, 171.58 was the low on the 22nd. You spike once to a peak F, a double top. That's that drop bucket pattern. Whoosh, where do you go to? To something you didn't even have to look at all until now. The 200-period exponential moving average, which was tremendous resistance before, until the breakout on the 25th of January. Now it's become a focus again. Really important. So when I look at this, question, could that be C1, C2 double top on the euro? Yeah, that's a really good question. So let's do that since I'm doing a little preamble to my webinar tonight. It made the euro made a peak G top in on the 24th of February, and then this high 34855 was just missed. 3485, yeah, missed by 5 cents. So you had a peak A, B, 838. That's and then it failed at a peak C minus, I believe. That's right. So let's go to the 120-minute chart. That's the first thing that I would have done if I had a chance. I would have gone. Now this is really important. Oh, this is what a great question, MMS in the debt. This is a technique that I will discuss very briefly tonight. C1, C2. What does it mean? It says that everything about it tells me that this particular chart should have made a peak D. It had a rally. It had the MACD was good at that moment. The stochastic was good, and it just barely failed. And it has all the prerequisites and then the requisites of a potential double top, so you got to be careful. But a C1, C2 is like a magnet. At some point, I can't tell you how many times this has happened, at some point you do go back and you retest and you break to a leg D. It's just, I don't know why, I don't know how. That's just the way this thing works. My target has been 1.35130, the 200-period exponential moving average on the EUR-USD. I think this is going to be another one of those monotone days, and I don't like that. Good question. Good question. I just had an email. Let's see. Using E-money future, could this be your problem? For the E-money. A question from Dan who sent me an email. He uses Thinkorswim. I was running. I can't believe I'm running out of memory. As the guy at Trade Station yesterday, we're trying to find the problem why sometimes I cannot save and sometimes I cannot. It just shuts down on me. And the guy said, you have enough power there they went to the moon on less. So it's not that. It's just that I had just too many charts up. I also had the program for tonight for my webinar. So I've taken that away. I'm set. That part of it is okay. So thank you very much. That was a great question. Now let me just go through this again. I want to say that I am not going to allow any emotion get in the way of what I'm thinking right now. I have potential alternate wave counts. The technicals remain very strong. I've told my subscribers that if such and such happens any time today, we will go short one of the indexes. It hasn't happened yet. If it happens, fine. I don't care. And then we'll be short. Because that's the level that I need. That's the level that I need to be secure to say it failed at a price point that says we could now have at least a short-term sell-off, a consolidation. But if there is strength into the close, it will keep certain indexes. In this case, let me just look at the Dow. The weekly chart hasn't even blinked. It doesn't even know that there was a pullback so far today. It certainly will at some point, but it hasn't yet. The Dow itself has gone to a leg, and I've got an alternate wave count. So it needs for me, let's go to the Dow. If the Dow closes under 12,882.59, the low of the 27th of Feb, I believe we'll be going straight down to the 12,753 low of the 15th. I'll be back. Basil Chapman. Hey, let's get some calls for the last segment. I'll be right back. Dow's now only down 33. S&P's only down 2.89. I'll be back.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Chapman Tiger Technicians down, Dow's down 33, S&P's down 292.91. Now, if you look at the UUP, the dollar bull power shares, they've got this weekly pattern with a cup, and then they refuse to go above peak C at 2278 to 2279. Instead, they've pulled back very sharply. That tells me you could be thinking rectangle pattern maybe, but what's important is that the GLD, I've got the 2 charts together for those of you who are looking at Tiger TV. This is the GLD 2-year bull market, 2-year up channel, but broke out, went 184.82 to peak D, again a peak D, and then pull back. There's your C1, C2. You can see how important it is. Then it goes to D and E back in 2011. So that was just finishing up the thought from earlier on about C1, C2. Now look at this. It's pulled back, but it's still in the up channel. So if the dollar gets going, if the UUP is able to break in the next 3 days above 22.30, especially 22.45, 22.50, then gold will pull back. But if gold in the next 3 days continues higher as a currency of fear, we're looking at something completely different. Now here's another chart. 2 days ago, 1 and 2 days ago, we broke above the 1370.58 level. Remember the chart I was talking about, the S&P monthly chart? Today we're going to get the evidence of exactly what's going on. If this chart closes above 1370.58, it's at 1369.73 now in the month of February. I'm not saying it's going to. I'm saying if it does, it'll say to me that I've got a parallel wave count, and that parallel wave count, why have I got an A there? That's not right. That should be EA. So a new up leg E/A. That's going to say to me that, in fact, what we're looking at is something that has the potential to have a pretty decent pullback sometime in March, but to try to get to the next level, since it's in this major up channel, and that level will be 1440.24 sometime into the spring-summer month. That's if certain conditions are met. But in the meantime, this up channel is intact. It breaks the up channel if it goes to 1173. No, 11 actually has to go down in the next month. It has to go down to 1118 will break the up channel. So you can see this is a pretty strong up channel. And the resistance, and that's the level that I was looking at. I have an October 2012 retest of the 1576.09 high, all-time high. But I'm not saying it's going there. I'm just saying that that's the measurement that's out there that I will focus on. If we were to get into the 1380s at any point, then all of a sudden you're looking at left side highs as potential targets. So that means in March, if you break down, you close under the low of this month, 1312.45, something else is going on. That could be a peak E failure. I've got to respect that. So I'm giving you both sides of the coin. All I can say is right now, at least for us in my opening call, our longs seem to be holding really nicely. I was surprised. And the short that we just put on lost a point at $51 stock. I might try it again. It was a real test to see if it could pull back. It's holding quite nicely, but that was just the one short we had. And I'm quite prepared to put on shorts on the indexes if certain parameters are met. So I guess... Oh, and the one other thing I wanted to show is the volatility index is up 30 cents now. So if the volatility index really works by the end of the day, it's going to break above 19.25. That was the high of February the 27th. If instead it starts to pull back and the market rallies, that means that my weekly target of the 1427, I shouldn't call it a target, but my time price target of the week of the 9th of March, down to the 1450, 1420s is intact. Stay tuned for Larry Pesavento. I'll be back. Well, tonight I'll be back, but I'll be back again on Friday.